Welcome to our class today, and I want us to be able to have a discussion on the cost statement, on this kind of particular cost statement. And a cost statement is actually prepared by the manufacturing companies or the manufacturing concerns to be able to tell us the total cost of actually manufacturing a particular product. So that's why we are trying to be able to prepare a cost statement, and we have said that it is going to be prepared by the manufacturing concerns so that we can even be able to know the total cost of producing a particular kind of particular commodity or a particular product. So now the cost statement is going to be prepared by the cost accountants or the management accountants in manufacturing concerns. And I'm going to give you a format of the cost statement on how to prepare this kind of particular cost statement, and it's a highly tested kind of particular question in most of the KNEC exams, especially in cost accounting and also in accounting and control and other kind of particular courses. So now the format of the cost statement, we are going to have that format of the cost statement, so we'll be able to have the cost statement there. And we are going to have two Kenyan shillings, the first column, two currency signs, and another current signs on the far end. So we usually start with the direct material. Direct material, which we are going to be given. And that direct material, we are going to put it in the last column here, the direct material. And then we are going to be given direct expenses. Not direct expenses, but direct labor. Direct labor, you put it there. So in most of the questions, they have to give you that direct material and also the direct labor. Reason being, there is no way that a company can survive without having the materials. So the material usually constitute almost to 50 to 70% of the total cost of production, because a manufacturing concern or a manufacturing company cannot survive without having this kind of particular material. So we have to have this kind of particular material here, and also the direct labor in that kind of particular far end, which is where by now that is the human capital or the human resource. So a company cannot also function without having the labor. People have to be there to do that kind of particular work. So now we need the human labor, and the labor constitutes 15 to 30% of the total cost of production. And then we are going to have direct expenses, if any. So we are going to be given direct expenses, and we say direct expenses, if any. You add it here. And again, I say that this one is if any. Sometimes you may not have it. So now, if you are going to take the direct material plus direct labor plus direct expenses, then you are going to arrive at what we call the prime cost. You are going to arrive at what we call the prime cost. You'll be able to arrive at what we call the prime cost. So the prime cost is the aggregate of direct material, direct labor, and also direct expenses. And I've said that direct expenses sometimes in the question you may not be given. So you're going to be given direct material and direct labor. If they give you direct material and direct labor, you sum them up, then you are going to have also the prime cost. The prime cost. So now that's what you need to be able to know. And then we are going to go to what we call the factory. The factory stroke what we call production overheads. So these are those expenses that are going to be incurred in the factory. That's why we call them factory stroke production overheads. And some of them are going to be like power. Power can actually be used in the factory, so I'm going to capture it here in the first current sign in the first column there. And then we may have things like the salary supervisors. So if you are going to have a salary to supervisors, that one is also going to be captured here. The salary to the supervisors is going to be under the factory stroke, the production overheads. You can have depreciation of plant. You are going to have the depreciation of the plant. It will also be captured here. It will be captured there. We can also be able to have the factory rent. We are going to be given the factory rent. That rent for the factory is also going to be actually captured there. So those overheads that are going to be able to be incurred in the factory, like the power, the salaries to supervisors, the depreciation of the plant, and also the factory rent, you are going to be able to capture them here under the first kind of particular column, and then you sum them up, you bring them here. In the sense that if this was 10, and this is 10, and this is 10, and this is 10, that 40, you bring it to the far end, that way, so that it can be added together with the prime cost. So we're going to take the prime cost plus this kind of particular total factory overheads. So you add it, you are going to have the cost of goods manufactured. So you are going to have the cost of goods manufactured. And this cost of goods manufactured, and sometimes in your exam, they are going to ask you to actually prepare a production statement. So if they ask you to prepare a production statement, you are going to prepare it from the direct material up to the cost of goods manufactured. And then you can call it cost of goods manufactured, or what we call the production cost. You can also call it the production cost. So cost of goods manufactured is the same as production cost. It's also the same as factory cost. The factory cost. So it's actually the same as that one. That is if they have not given you the what we call the opening work in progress and also the closing work in progress. And maybe in the subsequent sessions, I'm going to be able to show you in a situation whereby you are given the opening work in progress. How can you be able to handle it? But these are just a simple question for the beginners so that you can be able to understand the format on how to prepare it. So now, up to here, that is going to be production cost, factory cost, or cost of goods manufactured. Cost of goods manufactured. And then you can be able to put it here. And then you are going to add what we call administrative overheads. Administrative overheads. We are going to be able to add them here if you have been given them, and sometimes they may not give you the administrative overheads just maybe in a group. They can actually give you, like now, office rent. You are going to be given office rent, maybe depreciation of the photocopying machine. That's going to be part and parcel of the administrative overhead. So you'll be able to highlight them here, and then you transfer them to the other side. Things like now the salaries to the accountants, those are the part and parcel of the administrative overheads. So for now, let me assume that you have been given as a group. So you are going to put it here, those are administrative overheads. And then again, we are going to add selling and distribution. Selling and distribution overheads. Selling and distribution overheads. And that selling and distribution overheads, you will also be able to add it here if you have been given as a group a selling and distribution overheads. Sometimes again, they may not give you as a group that way, grouped, the answer being the totals of the selling and the distribution overheads. They may decide to give you like commissions to the salesmen, maybe depreciation of the distributing vehicles. That's going to be part and parcel of the selling and the distribution overheads. Maybe rent to the warehouse whereby you are actually storing those kind of particular commodities. It's going to be also part and parcel of the selling and the distribution overheads. So now, the moment you add that the factory cost or the cost of goods manufactured plus administrative overheads plus selling and the distribution overheads, you are going to arrive at the total cost of sales. Total cost of sales. You are going to arrive at total cost of sales. So now you'll be able to arrive at that, the total cost of sales. And after arriving at that kind of particular total cost of sales, let me proceed down there that you can be able to see it. Sometimes they may give you a profit. So if you are going to add the profit, they give you a profit markup, you add it to the total cost of sales, then you are going to arrive at what we call the total sales. The total sales of that kind of particular commodity. So now this is the cost statement that the cost accountants have to prepare to be able to arrive at the selling price of a particular commodity. So they have to prepare the whole of that, and then they arrive at the selling price. How much should they sell after maybe having a certain percentage markup, that kind of particular profit, and that's the reason why we have to prepare the cost statement so that we can be able to know the selling price of a particular commodity. So that is the reason. So now this is the format of the cost statement, and that's how it is going to be prepared. And I want us maybe to be able to have a question of this cost statement. We want to have a question of the cost statement, and then we can actually be able to prepare this kind of particular cost statement. So now let me reflect that kind of particular question there. The question of the cost statement. So you can see that kind of particular question of the cost statement. That's the cost statement there. And the question is saying that you can be able to see the question there. So the question is saying that we prepare. So let me adjust the camera properly. So the question is saying that prepare a cost statement from the following information. So you have been given the information there. You have the raw material, which is 400,000. You have direct labor, which is 100,000. You have the factory cost, factory rent, which is 20,000. You have power, which is 10,000. And then you have the supervisor salaries, which is also 20,000. You have administrative expenses, which is 50,000. And then you have been given selling and the distribution expenses, which is 10,000. So now let us prepare the cost statement. So let me prepare the cost statement here. So let us have this cost statement. So the cost statement is going to be prepared as follows. And we are going to have our currency signs there, the Kenyan shillings here, and the Kenyan shillings, the other far end there. So now we are going to start with that direct raw material, or the raw material that you can be able to see there. So we are going to start with the raw material, or direct raw material, direct material, as from the format you added that it was actually direct material, or that raw material, which is 400,000, so which you can be able to capture here as you have 400,000 in that kind of particular manner. And then you can see that we have direct labor, and the direct labor, you can actually be able to see that direct labor is this 100,000 here. So we're going to have direct labor as 100,000. That's the direct labor. And then we check if we have any direct expenses, because we said direct expenses, we are going to include it if they are there. And sometimes they may not be there. And like now in this question, we do not have direct expenses. But the two of them, the raw material and also direct labor, that one must be there, because a factory cannot function without materials. A factory cannot function without workers. But sometimes those direct expenses can be absorbed in this kind of particular cost. So now, then it means that your prime cost is going to be 500,000. So that's your prime cost. So the prime cost will be 500,000 in that kind of particular manner. So you go to the factory stroke production overheads. Let us go to factory stroke production overheads. The factory stroke of production overheads, we want to be able to see those factory stroke the production overheads. Which are they? So I give you an example. We are going to have things like the factory rent. Any expense that overheads are like expenses. So those are those expenses that will be incurred in the factory. So the factory rent, and that factory rent you can actually be able to see is 20,000. So let us capture here under the first current sign as 20,000. And then you can see there are another factory stroke production overheads. We have the power. So that power is going to be captured here, and the power is 10,000. So we are going to capture that 10,000 in that kind of particular manner. And then we can also be able to see, if you see supervisor salaries, those are also part and parcel of the factory overheads, because most of the supervisors are in the factory supervising the work to be done. So the supervisor salaries, the supervisors salaries is also going to be captured there, and the supervisor salaries, you can see that it is 20,000. So we're going to write you at 20,000 in that kind of particular manner, and that's the end of that kind of particular factory stroke production overheads. We can have things like also depreciation of the factory machinery, if it was to be there, to be part and parcel of the factory overheads, that depreciation of the machineries and other kind of particular things. So now this is going to be 50,000. So I'm going to transfer this 50,000 to the far end, there, so that now it can be in line with the prime cost. So you're going to take the prime cost plus the totals of the factory overheads that you can be able to see here, which is going to give you 550,000, which is going to be the cost of goods manufactured, or maybe what you call the production cost. Let me call it production cost. The reason why I'm calling it production cost or factory cost is because in some questions, they are going to ask you prepare the production statement. So you are going to be asked to prepare the production statement. You are going to actually prepare it up to this point, whereby you are going to have the cost of goods manufactured, which is the same as the production cost. The cost of goods manufactured is the same as production cost. It's also the same as factory cost. So if they ask you to prepare the factory cost statement, then you are going to prepare it up to this kind of particular point. So you should be able to know that. And then now we are going to go to the administrative expenses or overheads. So we have administrative expenses. So these are those kind of particular expenses or overheads that are going to be incurred in the office, in the running the day-to-day activities of the office. Like now, if you are going to pay the office rent, you are going to pay the salaries to the accountants, salaries to the secretaries. Those are some of the examples of actually the administrative overheads, and also depreciation of maybe the photocopying machines, because photocopying machines and the duplicating machines are found in the office. So in this case, they gave us combined as a group. So we're going to transfer it direct to this point. Maybe if they were to give you the rent to the office and maybe photocopying machines, you add them here first and then you transfer them to the far end. That's the way we have done under that factory stroke production overheads. So in this case, we are going to put that 50,000 directly here. The 50,000, and also we are going to also add the selling and the distribution distribution overheads. Selling and distribution overheads. And the selling and distribution overheads, you can actually be able to see is 10,000. You capture them direct because also we are given as a group. And sometimes they may not give them as a group. They are going to give you maybe the salaries to the salesmen or the saleswomen, and maybe they can give you the depreciation of the distributing machines or vehicles, those vehicles that are going to do the distribution. And maybe they can also give you the cost, the advertisement. Advertisement is going to be part and parcel of selling and the distribution. So you may also list them here, you add them first, and then you transfer them to the far end. But in this case, you actually given as a group, as the whole group. So now you are going to be able to add this one, which is going to give you 610,000, and this 610,000 is going to be the total cost. So in this case, we were not given a profit. Sometimes in the question they will tell you that the profit is 10% of the total cost. So you're going to take 10% of 100 times 610,000, and that profit that you're going to get it, you also put it here. You add it with the total cost, and the answer you're going to arrive at is going to be the total sales. But in this question, we are not having that the profit markup, so we are going to be able to stop there on that kind of particular question and the total cost. So now that's how you simply prepare the cost statement. So I'll be able to show you the next kind of particular cost statements, the ones that are going to have a markup, a percentage markup, and maybe the ones again whereby you are not given the direct material. So you have to be able, this kind of particular raw material, you are not given the raw material. So you have to maybe calculate the raw material. I will be able to show you that one later. So now that is the format and also a question of preparing a cost statement. So thank you.